backbone to any economy in any nation. Good evening and welcome. This is Face the Nation. Our topic of discussion today is investments and beyond. We have two special guests this evening in the studios. Let me quickly introduce them to you. Joining us this evening on the show are Deepak Bagla, former Managing Director and CEO of Invest India, as well as Thilan Wijesinghe, former Chairman of the Board of Investments in Sri Lanka. A very good evening and welcome to the show, Deepak and Thilan.
Thank you.
Starting off, Deepak, tell us a little bit about Invest India. What has it done for India over the last 8 years?
Shamsir, Invest India is the National Investment and Promotion Facilitation Agency of the government. It's promoted by the government. It's a very interesting PPP format where the government plays a leading role, but at the same point of time, we have the private industry which sits on the board to guide the entire affairs. This was actually an idea and an initiative of the Honorable Prime Minister, Mr. Modi, when he came to power in 2014. And actually, he wanted to change red tape to red carpet. That's for the investors. And that's where Invest India came into being. So effectively, if you look at it, in fact, Invest India started off really in full force from 2015. That's when it got created. And today, Invest India is a single point of contact for any investor who comes into India. We give them a dedicated relationship manager. We walk with them through their entire investment life journey in India. And when I say we, I must clarify that I'm the former member of Invest India, and I've not been there now for the past 1 year. But this entire relationship approach was to help that investor through their journey, right from the time of conceptualizing their investment to their post-investment handholding. So that was the first aspect to it. The second, as Invest India progressed in its evolution, several other important initiatives of the government were also handed over to it to get executed. Some of them being, for example, Startup India, which has been an extremely successful initiative of the Honorable Prime Minister and which is now globally acknowledged as a big success story. In addition to that, there were several other initiatives, which is, for example, One District, One Product, where we have over 790 districts in India. And the Prime Minister's vision was that we pick up one product from each of those districts and turn it around to make it a global product, and thereby impacting the economy there. So that involves a 360 view and an execution on that focus. Apart from that, there were several other initiatives, which is also digitizing the entire investor journey where India is concerned. And some of the other notable initiatives of the Honorable Prime Minister were, for example, the ease of doing business initiative, not just at the central government level, but each of our state government levels. So how to work with each of those entities and try and see how we come up the curve. So this was just the beginning of these elements.
So Deepak, over the last 8 years, if you look at the investments that have been flowing into India, it's a staggering $600 billion. That's a lot of money. What's the success story behind India now? Because a few years ago when we spoke about India, it was not in the roadmap. It was among the top 10 economies in the world. Today it's among the top 4 economies in the world, very closely competing with the United States and China. What's the success story?
Shamsi, there are multiple reasons, but if I have to pick up one, I would say it is the strength of the leadership. And let me put that in perspective for you. The total FDI which India has got since its freedom and independence, since 15th August 1947, has been about $1 trillion. Over 600 billion of those have come since 2014 when the Honorable Prime Minister, Mr. Modi, took charge. Now let me tell you why I say I name the leadership as the primary reason for that. 2014, if you recollect and you just mentioned, India was termed as a fragile economy globally. Let me tell you what has happened in the past 3,500 days. The first is, on the GDP itself, India has moved from number 10 to number 5. It moved ahead of Russia, Italy, Brazil, France, UK, and now is knocking at the doors of both Germany and Japan. And if we continue going by the standards which we are, I think in the next 24 to 36 months, we should see India as number 3. For 7 of these years, India has clocked in as the fastest growing large economy on the planet. In fact, in the year 2024 itself, 16% of the world's growth will come from India. 16%. 35 million people will move beyond the poverty line just in the year 2024. This, in fact, has been an inflection year for us, and if I may say so, one of the most critical inflection years in the most unprecedented transformation of India which we have witnessed in the past 3,500 days. And if I really look at it, the people are the same. The government is the same. It's the leadership which made that difference.
Thank you very much, Deepak.
If I may just add to that, Shubsay, with your permission. Since 2015, India set up a new FDI record for itself every year subsequently, except for the past 2 years. In fact, even during the worst lockdown in human history, in COVID, in 2021, we received $83.5 billion, the highest ever we've received in our history. But I'll tell you what's interesting out of that. It's come from 161 countries. And remember, FDI, and Milan would bear me out, is not just about that dollar coming in. It's about a partnership. It's about a trust. It's about a trust in today, and it's about a trust in India's future tomorrow. And the other interesting element, it's come across 62 sectors. The breadth of opportunity which India presents today, and as a result of the policies and the execution-focused government led by the Honorable Prime Minister, Mr. Modi, you're seeing this huge transformation taking place, which is the most unprecedented in the free world ever in human history.
Right. Thilan, your job is going to be very difficult because of the fact that when we speak about an investment of over $600 billion in a span of 8 years, we begin to wonder what has Sri Lanka achieved over the last few years, if you take a look at 2015 onwards. But I want you to touch on investments that Sri Lanka has received over the last few decades, which are significant investments, because you were the chairman of the Board of Investments of Sri Lanka between the years 1996 and 2001. And there were significant milestones even during that period. But we don't see anything significant happening now. What is the reason behind it?
Tough question and tough fact to follow after what I've just heard from Deepak on India's achievements. Just to put your question in context, Shamir, Board of Investment was founded in 1978. A brilliant piece of legislation by legislators who were very, very progressive in their thinking. And the entire Board of Investment law was written to encourage single window facilitation, where when you enter into a contract with the Board of Investment, the incentives granted under that contract remains valid despite prospective changes in legislation. And the second element of the Board of Investment law was, in order to eliminate bureaucracies that would arise naturally with local governments, etc., stepping in, the BOI law allowed to declare any particular area as an area of authority, so that the local government functions would also be carried out by the Board of Investment. Now, let me start with the successors first. When the BOI law was introduced first, come 1982, we had migrated from a import substitution economy to an export-oriented economy, and agreements were signed between Motorola and the Board of Investment and Harris Corporation and the Board of Investment. However, their investment was stymied with the breakout of the July 83 riots. Nevertheless, if you look at the history of the Board of Investment until about the early 2000s, the BOI played a significant role in transforming Sri Lanka into an export-oriented economy, particularly in the areas of apparel and followed by light engineering. And then the next phase, post the quota era, you saw the Board of Investment, in fact, moving into areas of infrastructure, and that was primarily a focus during the term that I served as chairman between 1995 and 2001, where for the first time we attracted foreign and local investment into infrastructure ranging from hydropower, thermal power, telecommunications, ports, affordable housing, IT infrastructure, etc. Now, if you were to look at, I mean, if I may mention the 96 to 2001 period where we had a time, it was a time of war. I just want to rattle off because just to give a sense of what was achieved at a time where there was a war risk premium. We had P&O and the world's largest shipping line, Maersk, taking a shareholding in our first ever PPP port terminal. We privatized our ports before India, in fact. We had Texture Jersey from USA, we had Shell Terminals, YKK from Japan, Lodestar, which is now owned by Michelin, which is the world's largest solid rubber tire manufacturing company. In fact, I don't know whether you knew, Deepak, Sri Lanka is the largest exporter of solid rubber tires. And then, of course, you had Lanka Bell coming in from Indonesia and Telia from Sweden. So the list goes on. But what really stymied our FDI inflow was more of a protectionist thinking and a significant weakening of the Board of Investment law itself, and the BOI stopping its construction of, shall I say, special export processing zones, because those zones served as a plug-and-play infrastructure facilitation point. So essentially, the era from, I would say, post the ending of the conflict in 2009, most of the investments that came into Sri Lanka were in the non-tradable sectors, not so much manufacturing, but into real estate and tourism. So to answer your question, our performance in FDI has been checkered. There have been periods where we've hit, the highest ever was in 2017 when we hit close to $2 billion, and that was the period where the Hambantota port was privatized and we attracted about $1 billion in over 2 to 3 years. And really the reason for that is, in fact, the weakening of the Board of Investment law and the weakening of the BOI as an institution, and the increase of red tape and various other bureaucracies that stepped into impacting foreign investment.
So, Thilan, you spoke about manufacturing and we have not been able to attract, but if you look at the last few years, the last decade or so, we see a lot of investments coming into Sri Lanka from like the Port City project, for an example, of $1 billion US. Then we see a lot of infrastructure, power and IT projects. And as you correctly mentioned, manufacturing, we've not seen anything kick-starting and nothing significant coming into play. And Deepak spoke about leadership. How important is leadership to bring about investor confidence to any country?
It's a sine qua non. It's absolutely important. Again, if I were to go back to the era I served as chairman, I reported directly to the president. I was put to chair an interministerial advisory board where secretaries of ministries were compelled to come twice a month, in fact, to address all of the issues concerning investment, some of the facilitation issues, the bottlenecks. And there was proactive intervention by the head of state. So therefore, in my view, the leadership of the BOI, the ability of the Board of Investment to win the confidence of the relevant line ministries, and then take them on board and ensure that bottlenecks don't stymie investors along the way, absolutely important.
So Deepak, when we speak about investor confidence, it goes without saying, you spoke about leadership. Thilan seconded that notion as well. Leadership is very imperative, a prerequisite to bring about investor confidence to a country. When you look at Sri Lanka now, 2022 was a rough year. We had problems with regard to our country's economy. When you look at Sri Lanka now, how do you view the country? How do you see the country? Is it investor ready now?
It's interesting you asked me, Shamsir, and I have a very optimistic view on that one. I recollect my first visit here was in 1996. It was the first global securities conference in the APAC region, and Sri Lanka hosted it. And you had the top global investors which were there, financial investors, Mark Mobius, etc., if I may name a few. And everybody was looking to expand their footprint in Sri Lanka. And even if you look at the performance of the stock market in the early 2000s, I think it was exceptional. But everything goes through a cycle and a phase. What I've been witnessing in my past 2 visits, which have happened in a short period of 90 days, one, I see a very strong sense of enthusiasm by the younger entrepreneurs. Younger entrepreneurs which are looking at new sectors, which have that fire in the belly to make it happen, and at the same time which want to see the country grow. And that, I think, is one of the biggest positives when you're looking at the future of investments in any country. And the other interesting element which I saw there is their ability to look beyond the box and beyond the traditional sectors. So Thilan mentioned, for example, you've done very well in healthcare, very strong industry also. Education, again, a very strong industry, a classic example of the success which we've seen. On renewable energy, your wind power is fantastic, and you mentioned about infrastructure. Obviously, there are investments coming in. Think about it, 50% of the world's trading flows are supported by the Indian Ocean. And look at the positioning of Sri Lanka where that is concerned. It's exceptional. The other interesting element of investments, 3 parts to it. Investment goes where there's an opportunity. Capital flows where there's a return. But most importantly, with those 2, capital will go where it is welcome. And I think I'm seeing the confluence of these 3 elements come back where Sri Lanka is concerned. You're seeing the opportunities coming up, and I'm seeing a number of Indian investors which are looking at infrastructure, the ports, the renewables. I'm also looking at a number of Indian investors which I've been working with, who will be looking at pharmaceutical, textiles and other such sectors. But also look at the quality of the human resource you have. Excellent. And based out of that, if you look at the new economy and the new world order which moves forth, it is going to be based on the things like AI and IT. And as we were discussing a little earlier, that back room is now moved to be the front room. And that is where I see some significant advantages which Sri Lanka can provide for the entire region, not just for itself.
So Deepak, when you look at investments, we're talking about over 60 sectors. I'm taking India as an example. You mentioned AI. I know for a fact that how the Niti Aayog Institute works in India. Sri Lanka is also a nation that has a good human resource potential, as you mentioned before. How can we capitalize on this? Because when we speak about companies, when we speak about institutes, we have a big role to play. The private sector is the engine of growth in any economy. What must the government do, taking India as an example, moving forward?
So first, let me just take it back to India, then we can see what parts of it could work in it. One, by and large, across the world, governments don't like change. They like status quo. So fundamentally, if I take that logic forward, they may not like innovation happening at the same level. They want to put their arms around it, and that's their job, to see that it is safe. One big thing which Prime Minister Modi did was to bring that change in mindset within the system. He brought that change in mindset that you have to change, you have to accept a new world which is coming in, and bring into innovation and try and see how you can do better in each and every aspect, be it governance or be it industry. He's challenged everyone. The challenge itself has created a new mindset. That mindset has made it investor friendly and open to investors and new ideas to begin with. The startup story which I was telling you about, it's actually a classic business school case study today. That a country which was, he launched Startup India on January 2016. So we're just about 8 years away from there. At that time when he launched, there were just about 200 odd startups. Today you have over 100,000 startups registered with the government of India. Another 100,000, or as for the market sources say, could be out there. But the interesting thing, India today is number 3 in the number of unicorns, number 2 in number of startups, and number 1 with new startups adding every day in the world.
So, Thilan, Deepak spoke about return on investments. How important is ROI when we speak about FDI in a country? Before we go in for a short commercial break, I want to know how important is it to ensure that when we attract FDIs, we also talk about the return on investment. Because we have a few projects in Sri Lanka which are quite different projects. How important is it moving forward? We've learned a very hard, a bitter lesson. We are still trying to swallow that pill. Why is ROI so important?
ROI is not just only important to private sector but important to government as well. Actually, the better parameter to assess is return on economic benefits as well. So if you were to look at the construction of the Hambantota port with a massive loan, it resulted in major losses to the Sri Lanka Ports Authority, which is government owned, and the government was compelled to attract a investor. At that time, the government chose a Chinese investor to make a payment and take the port on a 99-year lease. So essentially, it is my personal view that without a comprehensive feasibility study on ROI, whether it's for the private sector or the government, that port should not have been built. And if it was built, right from the beginning, it should have gone and built it with private sector investment, because there were successful models that proved that privately operated terminals is what made the Port of Colombo a hub port. And both SAGT, followed by the China Merchants CICT, and now Adani Port, which is under construction, the two port terminals that are currently operational are making significant profits, and they're reinvesting their capital. And John Keys, in fact, is very keen to extend their concession period, which is coming to an end after the 30-year period, for a further X number of years, and they will make another new investment in that regard. And the reason Adani chose to invest $700 million is that anticipation of the profit and the location advantage that Sri Lanka offers. Yes, return on investment is extremely important. But there's also the issue that when it comes to some FDI investments, if there are issues, the government must sit with the investor concerned. Okay, how is it that we can make your investment work? What do you need from the government? And make certain concessions. There has to be a give and take. And some of these PPPs in particular, we should be looking at, in fact, the Port City PPP was renegotiated because there were structural flaws in the concession agreement. So yes, ROI from the perspective of the government as well as the private investor is absolutely important.
Thank you very much for your thoughts in the first session of our show tonight. We're going for a short commercial break. Stay connected, stay with Face the Nation. Our topic of discussion today is investments and beyond. How to attract an investor to the country. We have the expert opinion coming up after the break. Stay connected, stay with Face the Nation.
Sri Lanka's precious world heritage.
Welcome back. This is Face the Nation. Deepak, you spoke about investments, the success story of India, the success story of Invest India. If you were to advise the Board of Investments in Sri Lanka, which was established in 1978, what would that advice be?
So let me tell you, Shamsir, when we were forming Invest India and looking at how it was, we looked at what Thilan had done. We looked at some of the amazing stuff which they had done and the way they had structured themselves. Especially their investor handholding was excellent. The other element which they did very well was actually identifying the opportunities and getting them created. But if may I, with your permission, take you back to the question which you put to us before the break, which was on ROI. Listen, please, ROI is absolutely central where a private investor is concerned. They work for a shareholder. Don't mix it up with the government. The government will look at welfare first. But for them, it is absolutely that return on capital. And where a government policy and investment facilitation entity can come in, and that's what Thilan did very well, is that from the day the project is conceived to the day it gets into commercial production, that means a return on capital, you squeeze that timeline. You said that many projects were delayed. The moment you squeeze that timeline, your capital works better. And the moment that capital works better, it gets a better return. There's nothing worse than lazy capital, which is lying there on the side, waiting to get that return. And that is where an investment promotion agency comes in very actively, where they can help get the approvals, they can help get their entire strategy and the structure in place so that it gets very quickly executed. And that's what Thilan and his team concentrated on. And some of the projects which they did, and it's especially true where infrastructure projects are concerned, because these are heavy capital investment projects. And Shamsi, the moment your capital is lying empty, your ROI goes. So that is where the critical element is. But coming back to that, I think one is of an investment promotion agency is to create new opportunities for investment. Two, the moment you have identified and created those opportunities which are based actually not just on the needs of that economy, but also on the strengths of that economy, you start creating the entire framework to ground that investment. That means there should be a good policy wrap around it. There should be, for example, an industrial zone where you may have a particular sector strength coming in. It could be textiles. So you need skilled labor, you need the energy, you need the power, you need the logistics. All that needs to be brought in together. It's a huge investment scenario. Apart from that, if you're looking at an export market, you need to get your FTAs in place. You need to get those relationships developed. You need to help your producers and your manufacturers get connected with the global markets to be able to take them out. And then most importantly, you need to handhold them after their investment has taken place, because there still will be issues. So you're putting it all together, it's an entire lifetime journey, and it is a roller coaster in some ways.
So Thilan, investor hand-holding. When I hear Deepak, I feel very envious about India. Why? Because Lee Kuan Yew, the former Prime Minister of Singapore, looked at Sri Lanka and said, this is going to be the next developed nation. Where are we today? When you hear individuals in the caliber of Deepak Bagla, who was a former managing director and CEO of Invest India, coming and saying, we looked at the Sri Lankan model before we implemented the Invest India program, I feel very, very envious. I'm thinking, what went wrong in Sri Lanka? Because at the end of the day, before we speak about the future and how to attract an investor, we need to do a diagnostic analysis as to what went wrong in the country. In your opinion, what happened?
A significant weakening of institutional capacity, a lack of coordination between various institutions, less focus on FDI and more focus on government-linked investments, which you rightly said, quite a few of those were white elephants. Inward-looking protectionist policies, for example, para-tariffs being put into play and therefore export-oriented industries getting somewhat uncompetitive. Failure to deepen our relationships with our neighbors, for example, the Indo-Lanka Free Trade Agreement migrating into a services agreement, failure to sign new free trade agreements which opens up new markets. So there were a whole host of policy-related factors that resulted in the weakening of the institutions and particularly the weakening of the Board of Investment Law. I don't want to go into the technical details, but it ended up by having far less teeth in the latter part of the 2010s as opposed to the power that the Board of Investment was vested with during the time I was chairman. But these are easily correctable. My view is that Sri Lanka is a country that can turn on a dime. At the moment, I know that the president is planning to introduce a new Board of Investment law. There's going to be an agency called Invest India. I've seen drafts of that legislation, very, very progressive, and these need to be put in place. I think the next point where what went wrong for us was the clarity of the rules and inconsistent policies. For example, you start construction today, and year one, a new set of taxes are introduced. Year two, another set of taxes come in, and then suddenly your entire investment scenario goes, and your cost structures goes out of the window. Now, that's what I meant by weakening the Board of Investment law, because in earlier times, when you sign an agreement with the Board of Investment, there were the tax exemptions that were given pretty much lasted for the lifetime of the agreement. So the other aspect that I think that impacted was the inability to solve issues that investors would face when they enter into a country. I can explain this by just two examples. Virtusa, as you know, the only Sri Lankan company in software to list on the Nasdaq with a $2 billion valuation. When they signed the Board of Investment agreement, the founder, Chris Kanagaratha, told me, Thilan, we have searched, we can't find, in 1996, we can't find a building with high capacity fiber optics. I immediately went to my board, gave a grant to the World Trade Center to lay a fiber optic cable from top to bottom, and Virtusa started their business at the World Trade Center because it had plenty of space available. Apollo Hospital, which came from India, they came and sat with me and said, Thilan, the government valuer's valuation is quite high, and we cannot make a return because on top of this valuation, we have to pay for the transformers to draw the electricity, we have to pay for the sewerage for it to come to the periphery of the site, etc., etc. So we sat with the board, with Apollo, and framed a policy, not just for Apollo, but for any company. I told you about the ground rules being very clear. Any company that is going to enter into the healthcare space, making a minimum investment of so much, qualifying criteria, government will provide you the facilitation to pay for the land over a 20-year period or easy payment terms. The Board of Investment will provide the budgets to the local councils to provide the electricity and the water and the sewerage to the periphery of the site. That's how we managed to quadruple the number of private hospitals in the city of Colombo. So we need to bring that can-do spirit. We need to amend a few laws, and we really need to look at the leadership of some of these key institutions that are involved in foreign investment and their boards.
If you look at the investments in the power sector, look at what India has done. A couple of years ago, or probably a decade or so, the power generation in India was very expensive, and Sri Lanka was much lesser. Today, it's the reverse. Look at the power generation capacity in India, and look at Sri Lanka. It keeps on going up every single time we talk about. How important is it to look at matters like renewable energy, blockchain, in order to forecast power generation and so on and so forth? Why is it important for a country like Sri Lanka at least to look at the power generation capacities now?
The reason why our cost of power, when we had private power coming into Sri Lanka for the first time in the late 90s, and I was responsible for some of those procurements. Every one of those were procured based on globally issued requests for proposals. They were not unsolicited. And the second point was that I managed to hire a team of private sector professionals working with the government to set up the first ever PPP unit, public-private partnership unit within the BOI, and we managed to get technical assistance from international experts to help negotiate the best possible terms. And that's one reason why we were able to procure power efficiently. Of late, what has happened is quite a few of the proposals have been unsolicited, and the ability of the respective committees to negotiate these terms is not supported by the required technical assistance. In several occasions, the PPP unit that was set up have been disbanded and have to be restarted, so everything is starting from scratch. So again, it is, as I mentioned earlier, a weakening of institutional capacity in terms of how you go ahead to procure based on transparent rules, open global tenders, and how you negotiate these transactions.
So Deepak, when you hear Thilan speaking about the issues in Sri Lanka, you said initially, to my opening question, you said that Narendra Modi got rid of the red tape and laid down the red carpet for investors to come in. What do you think is going wrong in Sri Lanka?
I'm not into the details to understand what's going on, but let me share with you a few thoughts as to the challenges which we are witnessing across the globe, not just with India or Sri Lanka. So we have this World Association of Investment Promotion Agencies, over about 110 countries, investment promotion agents based out of Geneva are members of it. So one gets a glimpse of the challenges which they are all facing, and the challenges are fairly similar. The first is you are in a world where everything is transforming rapidly. A statement like everything is possible but nothing is certain. Think of the way you're doing your purchases today. You're sitting at home and doing it. That means everything is being done in a different format. That means all those elements and industries which you thought were traditional are getting challenged to a large extent. The second, geopolitics and geoeconomics both have now, and especially true after COVID, which we've seen that there's a huge spurt on that one, is changing of supply chains, onshoring of supply chain. Businesses have realized that they've gone back to the age-old dictum. You have to diversify your risks and you get closer to where the market is. So supply chains are not just becoming closer to the market, but they're also becoming shorter. What does that mean? That today everybody is looking for an investment destination. But also what is happening, never before have we had such a competitive global economic landscape for FDI dollar. And the length to which countries are going to attract that FDI at times is very difficult in a democratic setup. I have certain countries which are saying you don't require any approvals, you come on day 4, everything is given to you, including the land. I have countries where the vice head of the country is the relationship manager of that company, and every weekend the company doesn't come to the government for any issues. That person goes to the company's headquarters to check if you have any issues. They're training personnel and giving to them and maintaining their entire costs. So there is a complete shift in the world where that competitive nature to get that FDI dollar is concerned. And for that, companies and countries have to be very agile. And that agility at times is a challenge in a democratic setup. And that is where you need that ability to foresee what the requirements will be and to move ahead and to be able to make it happen.
So, Deepak, if I ask you, how do you get people to invest in a country? Let's talk about Sri Lanka. 2022 was a rough year. We are now just raising our head again. This is going to be a very crucial year for Sri Lanka because we may go for an election, a presidential or a general election. How do you attract an investor to come and invest in a country like Sri Lanka presently?
So Shamsher, I have a question for you. When you buy your shares in a personal investment, when do you like to buy them?
During volatility. Because the price will be lower.
You like to buy them low, right? And then you also expect that it'll go up. What has a chance of going up, which has already been up and then come down and then goes up? Life moves in a cycle. Everybody moves in that cycle. I think that is one core aspect which you can't forget. 2, please see your strengths. Look at the garment industry. You were right out there. Look at your local talent and the other things which we spoke about, which are core central strengths. Look at the geopolitical positioning where it is concerned, the geographic positioning. There are a number of those strengths, and around those can be a number of opportunities, new as well as old, which what the investor is looking for. Would you get every investor in the world? You cannot. But there would still be a certain segment which is very attracted to what you have to offer. Idea is just to get this to match together. And there's a lot which I think Sri Lanka has to offer. As I said in my last meeting, remember, the world wakes up to you every morning with that cup of tea. Your brand association with the entire world starts every morning. And there can be nothing stronger than that brand association for anybody, anywhere.
So you still see a silver lining for Sri Lanka?
Of course, it's not just a silver lining. I think it is there.
There's a golden opportunity.
Absolutely.
It's a matter of looking at how do we position our country, sorry if I interjected, and the opportunities. I was just making a note, the tourism potential. Yes, we need to make sure that all of the approvals, whether it's environment approvals of, land alienation, agribusiness. I remember in the late, somewhere in 2009, when I was running a particular company, we did a survey of and found about 250,000 acres of arable land with more than 95% deforested, where we could create agricultural zones. If you take wind energy, just onshore, I'm not saying this entire amount we can tap, but there's 12,000 gigawatts of potential onshore and 50 gigawatts, I'll get this in a second, 50 gigawatts of power. And our total consumption in Sri Lanka is under 5 gigawatts. So we can become an exporter of wind energy, and more than half of the offshore wind is in shallow waters. And one day that will become viable. Pharma industry. The government has started certain buyback arrangements, facilitate them to become export oriented. Digitization. India launched the Unified Public Infrastructure Initiative and the unique identity card, the Aadhaar card. And India is assisting Sri Lanka to launch a similar initiative. Now that opened up a plethora of startup opportunities for Startup India. I just make one more point, and that's exactly the mindset that we had in the late 90s when I first visited the Infosys campus in 96 to look at what's happening in India. Then we suddenly realized we need to privatize telecom in order to make data cheaper, which we did. Not only did we do that, we created competition before we privatized. We realized that universities were not graduating enough, so Dr. Gamage and I got together and we created SLIT. I still serve the boards of this company, 25,000 students. We account for 50% of STEM degrees today in the country. And what was the result of that? 15 to 20% annual export growth in the ICT industry. So the policy tools are available with us. It's a matter of us identifying the right sort of positioning, implementing the policy tools, and as Deepak was saying, clinical execution under strong leadership.
Thilan,
let me add one more.
Yes.
You have a very strong diaspora. And in an interconnected world today, that is one of your biggest trump cards. You just have to play it. Sorry.
Yeah, so, Thilan, when we speak about talent, we all know that it's the people who drive businesses at the end of the day. But we see a lot of good talent leaving the country at present, and this has become a major stumbling block to the country's economy. We are losing the cream. We saw in '83, you spoke about the '83 riots in the country. We saw a lot of people leaving the country because of this. We saw a 3-decade-long war. Because of this, people were leaving the country. 2022, when there was an economic crisis, we saw a lot of people leaving the country. How do you retain good talent? And why is it so important to a country like Sri Lanka to attract FDIs?
Again, to attract talent, because along with FDI, those companies will bring international skills. And I always say this, people migrating, yes, we lose that skill, but eventually they can send remittances and they can become themselves investors, which is what happened in India in the 80s when people migrated. They came back to India, to pretty much jumpstart the software industry. And also Sri Lanka needs to move up the value chain. We need to, even if you take tourism, the industry that I'm in, the next round of investment will be high-end, internationally branded, which can afford to pay the sort of wages to keep people here. Now, the other point is, I think we need to be more open about our labour markets. It is, you see, we seem to have a phobia of attracting foreign nationals with work permits here. I think Sri Lanka needs to, just as much as we are exporting talent, we need to import talent and create healthy competition between the local workforce and a foreign workforce. And I'm only talking of importing skilled people. You know, I mean, yes, in certain industries like construction, we have a shortage. And yes, in short-term on the short term, we've had Indian labour coming in and putting up buildings because India has a surfeit of labour in certain areas. So that's where the economic integration with India would help. The services agreement and the land bridge, the various other aspects. So I think there are solutions to this. But finally, at the end of the day, it's building confidence.
We're going for a short commercial break. We are in conversation with Deepak Bagla, former CEO and Managing Director of Invest India, as well as Thilan Wijesinghe, former Chairman of BOI Sri Lanka. Stay connected, stay with Face the Nation. We will be right back.
Sri Lanka's precious world heritage.
Welcome back. This is Face the Nation. Thilan, interestingly, private-public partnerships in Sri Lanka were thriving in the 1980s. 1990s as well. It was thriving. We saw a lot of projects being carried out in the country. As a result of that, the private sector was able to contribute very largely to the country's economy as well. But today we don't see prominence being given to the private sector of the country. Why is that?
There was both a policy and a mindset change that happened somewhere in the early 2000s, where attracting private investment into infrastructure or privatization of unviable or even viable state assets was seen as selling, or as we say in Sinhalese, vikinima. Now, that mindset of selling the family silver was exploited to quite an extent on various political platforms, and that resonated with certain people who felt that their jobs could be at risk. Now, my point is that what was not present, and I do sometimes make a complaint about the business press and the media in general, hardly anyone spoke about the successes of attracting private investment into infrastructure via PPPs and through privatizations. For example, I go back again to the example of the Port of Colombo. The moment we attracted private investment, ship waiting time reduced by 85%, and productivity of the entire port, including the state-owned terminals, improved by 60%.
And it's one of the biggest success stories.
That's why we became a hub
country.
The waiting period for a telephone line was two years and something like 2.2 years on average prior to privatizing telecom. Today, if you make a call, you have 3 or 4 operators who will come and fix up or give you a mobile phone. I mean, fixed lines are no longer in vogue. So the point is that we need to actually be in a position to have an open dialogue about the benefits of private investment, because not only does it result in a windfall to the government in terms of upfront cash, but the taxation of these entities as they grow, obviously they will pay more taxes. And that would strengthen the coffers of the government. At the moment, I'm involved in the privatization of, say, for example, the Grand Hyatt, which was acquired by a state-owned enterprise. And constructing 598 rooms by a state-owned entity at that time made absolutely no sense in terms of ROI. So really we need to go back and look at the successes, whether it's in India, even in China and other developing economies, of the successful PPPs that have happened, as long as they happen with transparently, and it is the right partners that we attract into the PPP. There's significant benefits.
So Deepak, you may be able to add more to this conversation that we're having right now with regard to PPPs, because you joined a UK-based private equity firm, and you were able to close up to $1 billion in committed capital to the fund, which would be invested in roads, ports and power projects in India. How important is the involvement of the private sector in any economy?
Private sector is critical in an economy, but let me take you back to the PPP question which you mentioned. See, inherently, PPP has two partners. There's a government, there's a private sector. Both of them have very divergent objectives. The government wants social benefit. The private player wants a clear economic return. This disconnect is very difficult to be able to bring together, and that's where the political underlinings come in, depending on which way it comes. And that is what Thilan was also alluding to, be it a policy or be it a shorter time frame when you're going to run the concession. There are many places where you find, even though concession has been given for 20 years, just because it's been very successful, it's been taken back in 10 years, because there's a lot of public opinion which got into it. So I think that inherent disconnect between the two partners, and remember, that partnership, even if it was with two private entities, if there is that inherent disconnect which can be so different, there'll always be a challenge approach. Reason why PPPs were brought in, Shamsir, because if you remember, traditionally, infrastructure was either created by the religious church or state or by the government itself, be it roads, etc. Now, because there was an increasing demand for it and the state did not have those resources, they wanted to bring in the private sector. And that's where multiple formulas were brought in, that you can utilize it for 10 years, don't change the ownership, and yet it started taking off. And please recollect, infrastructure as an investment category in the private equity industry actually came up only in the early 2000s. It's fairly recent. Where you had separate funds, for example, the fund which you alluded to, Varaz, was an infrastructure fund, and you had a certain set of an investor profile which looked at it. It will not give you very high returns, but it will give you standardized returns. At the same time, these are returns which are more dependable, and they're for a longer period of time. So those things came up. One very critical element of success in PPPs is the flexibility in that concession agreement which you do. Because the dynamics of every project will change over time. You need to be able to see that that project, what is the expectation of the two partners from it, also changes commensurate with the change in the economic underlying criteria.
So Deepak, interestingly, there's two sides of the coin. There is a good side and there's also a bad side. Right now in Sri Lanka, we're talking about a very contentious topic, which is the fact whether or not the government should be engaged in doing businesses. May it be the power sector, may it be the airline industry, may it be the energy sector. So this is a very contentious topic right now. What would your message be to the people who are watching this show tonight about this contentious topic? Must the government engage and continue to do business in the country for the public interest's sake, at least?
Shamsir, first I must state clearly, I'm no one to give an advice on this one. I think it is very specific to every society, every polity and every economy. But there's a fundamental rule. You have to choose the best of the real options sitting in front of you. Every option has a cost and a benefit. Now I know it's a very general statement, but the thing is you've got to evaluate real opportunities. What are your real options? And then I think you just place it out in a transparent manner and you can take a call on it. That's the simpler way of looking at it. And I think, to my mind, that is possibly the only way. If you do want to create a port and there is nobody willing to invest in that port until it is done in a certain manner, what is the choice which is there?
So, Thilan, right now, you know very clearly that Sri Lankan Airlines is bleeding at this point of time. Just recently, the cabinet announced that $725,000 would be spent additionally to lease out 7 aircrafts to the country as well. Now, in an investment point of view, we're looking at selling off Sri Lankan Airlines at this point of time. Is it prudent to spend money now on Sri Lankan Airlines?
I can only answer this question without having all the information. That decision would be contingent on does the Sri Lankan Airlines, as it's running now, need this aircraft desperately in order to maintain its minimum amount of the service requirement and compliance requirements in terms of safety? Number 2, how quickly can the government move towards privatizing? Now, from what I know of, we are quite a distance away. I'm not involved in that transaction at all. Mm-hmm. And if it is months or years, it can be a year away, because when an investor, or when you issue a request, a proposal, and you have investors to evaluate their bids, and then the investor to do the due diligence, then be involved in negotiating the privatization or concession agreement with the government, that can take months, if not years. So in the meantime, I believe the airline has to run. So I won't answer positively or negatively on that issue, but you asked a more pertinent question about how do you convince the population on the merits of privatization. It's simply that the fact that we went bankrupt was essentially we failed in our initiatives to capture enough private investment into building infrastructure, and we went on a debt-fueled binge of building large-scale infrastructure, some of which has never given a return. Just to give you an example, I was involved in a highway sector PPP, which never got implemented because of election changes, where the engineer's estimate of the Road Development Authority for that stretch of road and the private party's investment was 40 to 50% lower than the state-owned engineer's estimate. Similarly, for another renewable energy project that the Ceylon Electricity Board borrowed concessional financing from a donor agency, from the per megawatt cost to the actual cost of generating energy was 25% higher than we had if we had gone for open tender with private investment for that particular project. So there is enough and more quantitative, qualitative, policy-based analysis that one can present that the government should focus itself on its social infrastructure, where the private sector investments are inadequate, but rather than building infrastructure, provide that as viability gap funding, for example, which India has done very successfully on some of the toll roads, and preserve public investment into areas such as health and education and providing the required infrastructure for the private sector where private sector returns are not available.
So Deepak, right at the start of the show, you spoke about the thirst that the people in Sri Lanka or even in India has on entrepreneurship. So you won the special jury award for the Ernst & Young Entrepreneur of the Year award in the year 2023. Sri Lanka right now, when there is an entrepreneur with a mindset to develop a brand, probably a small and medium scale entrepreneur, he or she is scared to do it because the banks may not lend money, you have to keep a collateral, it's not easy. What is the advice you have for young entrepreneurs in Sri Lanka? Because at the end of the day, countries are driven by entrepreneurship, and you can take India as a classic example. In the Sri Lankan context, what's the advice you can give them?
Shamsir, in any context, if you have a dream, don't leave it. Don't leave it. Follow it through. It's not easy. And the more difficult it is, the better are the returns. And frankly, if you look at it, Sri Lanka is very well positioned economically and even socially. Mm-hmm. There's a very strong fallback arrangement which is already there. What do you have to lose? Just go and do it.
They say, Deepak, reach the stars, at least you will end up on a treetop. But entrepreneurs should always remember that lying on a treetop and looking at the stars is not the option. If you can reach the stars and touch the stars, that's where success lies at the end of the day.
And at times of adversity is also where entrepreneurship can thrive, which is what I did in the early 90s when we had a problem in the north and a problem in the south. We started an investment banking company, and then we started together with Dilma, started a hotel. Notwithstanding the war breaking out, the company was profitable because the business in and by itself was successful. So plenty of things for young people to pursue, even in this challenging environment.
So Thilan, you spoke about 1996 to 2001, which was a very bitter time for Sri Lanka even at that time because of the war. There were a lot of operations that were launched, like the Operation Sirasa, the Elephant Pass operation. It was tough times. There were bomb blasts that were going on. The central bank bomb was a classic example in 1996. The Dehiwala bomb blast in 1997 was a classic example. It was tough times. We're now talking about a resilient nation. What must Sri Lanka do? So this is my final question to Thilan and also Deepak. What is the way forward for Sri Lanka? What lessons can we learn from other nations? And what must we keep in mind as a solution for the country? So I'm going to give 3 minutes each for both speakers to sum up and give your concluding remarks.
Diligently focus on the ease of doing business, lay clear ground rules on the qualifying criteria for investment, strengthen the institutions that would facilitate investment and provide leadership to those, and do not hesitate for those institutions be filled with people with the level of competence that a Deepak Bagla would have.
Deepak?
I think first get a clear roadmap, be it 5 years or 10 years, and get complete bipartisan consensus on that one. Be it like the entire country agreeing that that is the roadmap which you do. And then comes the other parts, which is like ensuring that you pave that road while you get the policies, you get the supporting elements which are put in place to make it happen. I think that's the best way forward, and that is going to take you off.
Deepak, one final question to you before we sum up and conclude tonight's show. Implementation. I recollect a couple of years ago when I was moderating a session at the American Chamber of Commerce, Prime Minister Ranil Wickremesinghe, in his capacity as a Prime Minister at that time, when I asked him a question, what must Sri Lanka do, what must Sri Lanka learn from the past, he said, I have 3 lessons. Number 1 is implementation, number 2 is implementation, number 3 is implementation. What are your thoughts? What must Sri Lanka learn from other nations?
Absolutely core to the perfect. If you look at it, as I told you, we are now getting into an inflection point which is going to be the largest ever election in human history. And by all accords, you will have Prime Minister Modi being sworn in as the Prime Minister for a 3rd term and for the 18th Parliament of India. And one of the elements of the Honorable Prime Minister Modi is execution. It's execution, timely execution, timely execution. Everybody values that. It is something which is non-negotiable, and that is what needs to be done. And people in the country reward you for it.
Thank you very much, Deepak. Yes, yes, very quickly.
Just to qualify very quickly, implementation, yes, without losing sight of fiscal discipline and governance, because investors need to have a transparent environment without the hanky-panky in order to make investments.
Thank you very much, Thilan Wijesinghe, former chairman of Board of Investments, Sri Lanka. Thank you very much, Deepak Bagla, a former managing director and CEO, Invest India. If there's one lesson that I learned today is the resilience of a country like India over the last 10 years. Where was India? Today, where is India? Number 4 economy, people are talking about it. There's so much of pride in the people of India. They know what exactly they're doing. And the difference is leadership. I leave you tonight with a quote, as I always do. A great leader takes people where they don't necessarily want to go, but ought to be. Take care and good night.